Get out now. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, a major market meltdown is imminent as they are dumping everything. And I want you to understand this is going to get much worse as the big sellers are about to hit their trigger points, which is going to cause stocks to drop in a big way. But this is going to set up a fantastic opportunity for you, which is why we like to look at the technicals, momentum, and machine positioning every Sunday to help you be a better trader and investor. And now let's head over to Bloomberg, where we kick off our Sunday show, the show that makes you money, with the headline: if traders are cashing out of markets in mass, if they've already pulled billions out of stocks and junk bonds. And the worst part of this is it's about to get a whole lot worse. And many people think this is just a mild correction, but what we haven't seen is the big sellers emerge. I'll show you why they are about to hit their trigger points, and this could cause stocks to go into an outright massive correction. And with treasury yields breaking out, Federal Reserve hawks ascended, and Middle East strife flaring, money has been pulled out of equities and junk bonds at the fastest rate in more than a year. Dip buyers have been muzzled, and the S&P 500 has fallen every day this week as the top 7 tech behemoths closed nearly 8% lower, with equity volatility climbing. And we know that when volatility starts to rise, bad things happen to equity prices. I put out, in fact, a special video to my subscribers for CTA Timer and Momentum Timer Pro. If you're a subscriber, check that out. If you're not, check out the links in the description below for a free 30-day trial, as they're weak hand selling and will continue to sell since they weren't enthusiastic to buy in the first place. And we see this happen all the time in markets. When people are making money, they talk about it. And people that haven't really bought into the market, they start buying at the top. And then what happens is the market goes down, they start losing money, and next thing you know, they turn into sellers, and then other people start selling. And then, of course, it gets really bad as the big players have to turn as well. And people got sucked into chasing the rally, buying stocks at high valuations despite warnings that, well, this may not be the best time to buy. And now, a month or so later, the trades aren't working. And I can tell you, when people are upside down, they start to hit the sell button. And what that does is sets up bigger moves. And now we're looking over to Goldman, where we're going to find out the machines are sitting right at a trigger point. Here we see the tactical flow of funds report of their May preview, and May is going to be a critical month here, because looking to this, the bar for earnings for highly owned companies just got a lot harder to beat given the market volatility, suggesting that if something goes wrong with earnings for any of those Magnificent 7 stocks, well, it means we could see some big drops, pushing, of course, markets down even more and kicking off some trigger points to see a much larger unwind. And we've seen the short-term lid on the top side as demand runs out of ammo, as everyone's, well, all in and sell in May and go away. Well, this could be a dangerous time. As challenged liquidity in macro products is liquidity. Well, that's a privilege. Liquidity is when there's enough buyers to meet the sellers. And here we can see liquidity has dropped minus 64%. Anytime this number gets below 10 million, which is at 8 now, liquidity comes challenged. And when you're trying to move big risk, which means if big sellers start to hit the market, and we'll take a look at the machines here in a moment, what it means is there's not enough buyers to absorb what they need to sell, and that causes big outsized move in stocks, which means other machines start to sell, other trigger points start to happen, and next thing you know, stocks are dropping in a big way. And here we can see over the next week, sellers, $4.5 billion of global equities. This isn't much, $7.5 billion out of the US, but remember, liquidity now is at a premium. In a down tape, which we're seeing, look for a $28.9 billion of global equities to sell, $14.4 billion out of the US. Again, this is the machines. They are just programmed sellers. They hit their trigger points. They got to go. And over the next month, which is absolutely critical as we get to the sell in May and go away, look at this flat tape. Sellers at $19.2 billion. Doesn't sound much, but 14.4 out of the U.S. There's your big supply number for the first time. But see this down tape? Sellers $228.8 billion of global equities, $78.5 billion out of the U.S. major indices. That would cause a big drop in stocks, potentially without the liquidity of buyers to step in here. And what we can also note that volatility control, these are machines that as vol goes down, they buy stocks. Well, if volatility goes up, guess what they have to do? The exact opposite. They're sitting at max long position still. And as volatility continues to rise, look for them to have to sell. And what you start to build is a potential feedback loop of machines triggering other machines to sell, which then trigger those machines to sell again. And without liquidity, next thing you know, the whole thing starts to unwind, particularly as we head into May. As Goldman notes, well, the seasonals are really bad here. You want to sell in May and go away, at least for the first 2 weeks, as it represents the fourth worst 2-week period of the year. But nevertheless, there are still opportunities, which is why you should stay tuned to check out the chart for our sponsor, Griffin Digital Mining. Check out their symbol GRYP, because the issue we're facing this coming week, well, it's a magnificent 7 as their earnings arise with stocks at critical moment, and these shares have already lost $930 billion since the NASDAQ 100 peak, and there's hopes for big earnings, but if they disappoint, watch out, because you'll see these machines that sell on the news cause, of course, the bigger CTA machines, vol control machines, could all hit their trigger points very, very quickly. But we gave you the heads up on this. So let's take a look at our momentum screens. Let's start out with the S&P 500. As we like to do every week, we noted momentum is negative. Now, where are we getting some of this data? Well, our subscribers. Now, we have a machine mimic program. It's called CTA Timer Pro. We have 2 algorithms, a fast one that moves very quickly with the market, a slower one where there's more money. We alerted our subscribers to the fact that machines were selling ahead. That's the advantage here, is even our own subscribers send me emails, say, Steve, the big advantage of your reports is simple. Now I trade with machines, not against the machines. I know when to get out. I know when to get short. I know when to protect myself because you give me the heads up. But looking at momentum, we look at the relative strength indicator. Now the market's oversold. We went from overbought now to oversold. The moving average convergence divergence, that's the MACD. It's got a negative cross, but a lot of people struggle trading with these, and we have a report called Momentum Timer Pro that pulls these signals and other technicals together, adds an overlay to it that no one else uses to smooth them out. We've got 6 consecutive daily buy signals. So you pair these together, and our subscribers knew it's time to lock in positions, raise stop loss levels, and start to build up cash, because the next upside now is the 50-day moving average. But the downside, well, you may remember from our show a couple of days ago, some experts say that market could drop down to its 200-day moving average. Well, maybe it gets even deeper than that. Let's take a look at the charts here. Here you see the S&P 500. Why the 200-day moving average here in tan? It's real simple. Look at the 6-month volume profile line sitting right there. Let's zoom out to the 1 year. It's far deeper. So the reality is this could get down to the 200, may shoot past that into this lower supply zone. But look at this as we zoom in. On the 90-day chart, you see buyers well below here, but what is causing this panic selling? You got it right here. People buying at the top who had no business buying there. They're now in negative positions. They're seeing the headline news come out suggesting that maybe stocks could go lower. It's causing them to sell at a time when there's a lack of liquidity, and there's no signs that liquidity is going to be returning, which is very, very dangerous here. And that's why, of course, we think the market could sell down far lower than the 200-day moving average. Let's take a look at the tech stocks, because we're going to get their earnings this coming week. Momentum also negative. Relative strength indicator oversold. But remember, markets can stay oversold for long periods of time. We may see buyers come in here on a technical basis, but if those machines hit, and that's the warning here that we're giving you, the machines come in, they're just going to mow through these buyers, and they're going to turn around and tuck tail and run. But again, we gave you all the warnings you need for our subscribers. Again, machine position, you see it selling off here, max short on the fast algorithm, starting to go short on the longer, slower term algorithm. Momentum Timer Pro picking up 6 consecutive daily sell signals. And we told you the market had been stretched for a long period of time. Again, now we're making the case that the NASDAQ could get down to its 200-day moving average. Let's take a look at what's going on with the Qs here. And again, you look at the last 30 days, you see people buying up here. Now all of a sudden, they're looking at their counts saying negative numbers. Nope, we got to sell. Let's zoom into the 90. You see over the last 90 days, people again crowding into tech, now looking to get out. We zoom out here to the 1-year chart, and you see the reality is this could easily get down into the supply zone, potentially even lower, depending on how illiquid the market is and how much selling we see by the machines in those vol control strategies going forward. So we're in a dangerous position here. And how about the small caps? Many of you have been asking, Steve, will you please cover the small caps? Well, we've got them, again, oversold. But this doesn't matter because the machines, and this is something very important, they do not care about technicals at all. They don't care about the RSI or the MACD or any of those things. They have trigger points and they sell like stop losses, which is what we encourage you to do. And you can do this even with your 401ks. Just write down your level. If it breaches, start selling some positions, raising cash, because you're going to have opportunities. And we're going to show our subscribers when the opportunity knocks. Because look at this, our machine positioning, max short. Here we see momentum selling off. This thing could go down 185.58, if you can imagine. Now let's take a look at IWM here, because what we're seeing is some big selling. And here's that 185.58 level. Why is that? Because over the last year, that's where most of the buyers are at. And if we see the machines really get into this, it could drive even some of those buyers out. As we see, this thing has dropped a lot. It's coming right down to the 200-day moving average, but support isn't there. It's beneath that. That is dangerous. That would get people to sell as well, mainly because there's a lot of strategies. Some of my buddies even run these. The trade based on the 200-day, you cross over, you've got to sell. There are a lot of people that start to turn and burn here, and a lot of retirees, they can't afford to hold on to these losses, so keep that in mind. They've got to lock in those gains if they have them, and that puts them into the sell mode. But everyone's fleeing to the energy sector. Well, is that going to be a safe space? Well, history says no. But in the short term, it can be. Momentum has turned negative here. The RSI has come off that overbought territory, which we were warning. So yes, this can go higher, but if you're trading this, watch out. MACD's turned negative. Momentum Timer Pro, this is actually 4 consecutive daily sell signals, not buy. I forgot to update that. How about this? Next upside target is a recent all-time highs. Next downside 50-day. But look at our machine positioning. We're already learning. Look, momentum is starting to sell off. We're seeing the machine position because we do something different that no one else does. Not even machines. We run a historical overlay, so we tell you ahead of time where they're likely to be. Let's take a look at XLE, because even this is starting to show some warning signs as big players get out. And here, look at the last 10 days, sellers selling up here at the top. There you see that volume profile line, where the last 10 days the most shares have been traded. Now, don't be surprised if you see price rally up here, because again, investors are chase things that are high, and they will buy out of the major indices into energy, because that's what they're hearing in the news. Look at the last 90 days. You've got a big catalyst that XLE could come dropping down in a big way. And there's a good reason for it, because as you zoom out, you notice the energy sector will have some big run-ups. And then what happens after that? Big drops. And why is that? It's one of the most manipulated sectors in the market. Big players let all the small hands buy in, and then they sell, sell, sell. That's why you see these big drops, and it usually falls after you see word of conflict breaking out somewhere. Everyone thinks it's energy bullish, and then it's really all about macro fundamentals, which we know are not getting any better. Look for XLE potentially to come all the way back down here into support at around 75 at some point. Could you imagine that? Sets up a potential huge topping pattern in the energy sector. That would not be good. As again, money is flooding in there in a big way. But let's talk about the bond market. We've seen some machines selling over the past couple of weeks. Momentum is now negative still. RSI is coming off of this oversold territory. MACD still got a negative cross, but starting to bottom out. Now you'll note this is one of the few things we've traded without a stop loss level. Currently that trade is down 6.55%. Here's the great thing. This is something we show our subscribers. When we see the max short across the board, now we give you the signals when they flip, so you know this. And then you pair it with Momentum Timer Pro. It's got a big max signal on the 1 month window here, followed by a whole bunch of sell signals. When these two things flip, that is one of our golden signals. If you want to know when to buy into the bond market off of this dip, you got to be a subscriber. Why do we give you 30 days? Because we know you'll make money. So let's take a look at this, because we've seen the machine sell, and now all of a sudden we're seeing the broad economy start to slow. Could bring some buyers in here, and what that still sets up our upside target unchanged at 93.67. Rise the downside target down a little bit here. Now let's take a look at TLT and see what's going on with the bond market. And sure enough, what do we find out as we zoom in here, because we really need to, that we are seeing a potential short-term bottom here, and each of these dips has been bought. We look at the last 5 days. You see buyers beneath here. You look at 10 days, and you see, all right, it's starting to hold above this. We have told our subscribers when to trade this on the next upside move. You want to find out my opinion, you got to sign up. And here you can see it holding that beautiful 10-day volume profile. You start to see a rally here. You've got the case that bonds could be the next big trade as the equity market sells off. And how about gold? Everybody's long gold. Well, if you're long gold, that means interest rates coming down. You see 43 consecutive daily buy signals. You want to know when to buy gold? We told you when. Our reports showed you. Now, keep in mind, it's long. Gold is maxed out across every scale. Machines, momentum. Look, if you own gold, it's time to lock in some stop losses up here near the highs, just in case. But let's talk about gold miners. Momentum's positive. This was a massive trade for our subscribers here. You'll note that a lot of our subscribers are up 25, 30+%. Now, we got stopped out because I get a little tight with the stop losses, but a lot of our subscribers let this ride, and sure enough, they made a ton of money, and so could you. But let's take a look. Upside target 36.26, that's unchanged, but we see momentum starting to slow here. Let's take a look at GDX, what's going on with the charts here. And all that means is momentum's just slowing down a little bit here, but that doesn't mean that price can't rally. Let's zoom out from this 30-minute chart here to the 2-year chart. And what do we see? A potential jump back to what could be a double top here. If you see a double top, time to cash in on this trade, but there could be one more move there. If gold breaks out even more, well, you're looking at now potential up here to almost $40 a share. So again, as you make money, the key here with GDX, lock in your gains. And here you can see on the 10-day volume profile, buyers are absolutely stepping in here. So the bull case for GDX is still alive and well. And something else that's got the bull case is agricultural commodities, 65 consecutive daily buy signals. We showed you this trade live on the show, December 18th. Now up 26.48%. Yes, everything stretched alongside, which is why we keep bumping up our stop loss level every week. Want to encourage you to do that as well. Let's take a quick look at DBA, because what do we see? Is this thing? Well, we don't know where it's going to go, but it could go quite a bit higher. And what would be the catalyst for that? Well, another potential trade we give to our subscribers based on our signals, and that is, of course, soybeans. Now, we got stopped out of this, but we're setting up another move. And how do we know? Machine positioning is getting negative. Momentum's getting negative. But what is the key on the charts? And what have we told our subscribers? Well, you've got to sign up to find out what we told them. But let's take a look at the charts here. What do you see? Over the last 10 days, it came down to the supply zone. How about this? 5-day volume profile sitting right underneath here, setting up a potential move. We told them what we think they ought to be buying. Look for a breakout over the 6-month volume profile. But you can see this clearly defined move. Came down, got a little oversold. Buyer stepped in, beautiful supply zone, rallied into a sell zone. Sellers drove price down. Buyers stepping in here. You want to talk about the catalyst for DBA to go higher? Well, you've got all the moves there in soybeans looking to do that. But what could derail the market? Well, that is the dollar. Let's take a look real quick here at the dollar, because I want to show you a big opportunity with Griffin Digital Mining. Now, UUP, which is showing right here, is looking to potentially peak peek out. We think it could be a break up here to the 29.27 level. That would be, of course, very bearish for the overall market as a safety trade, but look for the Fed at some point to start to cut, and that would have a big impact on the dollar.